So what's going on with interest rates? Because obviously interest rates do influence our market. They have such an impact. And we've had 3 interest rate decreases this summer and then the beginning here of September, which is fantastic. Now, remember, the interest rates as announced by the Bank of Canada are all about the variable rate. So if you have a variable rate mortgage, your mortgage payment could be going down. That rate or the ratio of each payment of yours between principal and interest could change. Or if you have a line of credit, that rate changes. However, independent of that is the 5-year Canada bond, and it dictates those fixed term interest rates. And what has been very interesting is you can see earlier this year, as early as May of this year, we were sitting at 3.8%, and we're now down to 2.7% for the 5-year bond. You can see the 52-week range, 4.4 down to 2.7, and lenders are acting. We are starting to see mortgage interest rates in very low levels, which we're going to take a look at. And even today, I've seen the first headlines of 3.99% fixed term interest rates coming. And there was one tweet of a mortgage broker that managed to secure a 3.99% fixed rate for a client of theirs. So we've been hearing that the banks are getting quite competitive. For the first time since December of 2022, we're getting those lower interest rates, which prevailed prior to that really busy spring that we had in 2023, where prices really escalated. And so that's interesting. So this could be coming, that activity could be coming in the market. Traditionally, interest rates lag the activity. It takes a little bit of time. So this could be showing up. We could get that strength in the market that we're looking for. However, if we continue to get the volume of inventory, even if our demand increases, there may be just a bit more excess supply, keeping a cap on those interest rates until we get through a little bit more activity in this stage of the cycle, creating opportunity for buyers. And of course, sellers have to be extremely, extremely sharp and think very well when they're pricing their homes as well as their overall marketing strategy. Now is not the time to think that you're just going to stick a sign in the lawn and sell your property just because interest rates are coming down. So here you can see this was a post from WOW Canada. You can see some of the mortgage rates lowest since December of 2022. You can get insured 3-year fixed for 5.29. Uninsurable 4.69. Of course, everybody's situation is a little bit different. Here you can see these 5-year fixed rates, pretty insane. We haven't seen these kind of rates for a while now. So we're definitely getting back into that more affordable range. And the Bank of Canada is projected to continue to decrease. We may have 2 more decreases this year, and there's a whole 1 to 2 points decrease that could happen next year if inflation remains in check and the economy shows some signs of weakness. The one thing that they need to do is make sure that they do not push us into a recession. It's somewhat questionable. It's possible that we could actually be in a recession if it wasn't for all of this in migration that's been happening. So the Bank of Canada could accelerate these decreases or continue on with that moving forward. Again, we don't know what the future holds. However, the rates, especially those fixed term rates, are starting to become a lot more attractive, and there's quite a spread between the variable rate and the fixed. It would take a lot of decreases for the variable rate to get to where some buyers are able to secure rates today. One last thing that we wanted to share that we thought was kind of an interesting note to wrap up this market update is this recent study by Altus Group, and it talks about the municipal charges per unit for a high rise. So this is about new builds coming on in the city. And of course, we all need more housing. The governments have promised that they're going to be creating all this housing. Not going to happen. It's not economically viable. But one thing that was very interesting to note, you can see here the changes between 2020 and 2022, how much municipal charges are included in every home that is being brought to market. $125,000 for every single condo that's coming to market that new home buyers are paying for. It's pretty eye-opening to see what people are paying to actually create or fund the infrastructure that our city needs for this housing. Just an interesting stat there that I wanted to share with you. Anyways, let me know what you think about that. I'm Christine Kopr with Sotheby's Realty in Vancouver, BC. I hope you enjoyed this Vancouver market update. Make sure you stay tuned for more updates like these and check in with us next month, and like and subscribe to our YouTube channel and join our newsletter list, because we do send different types of opportunities and information on the various channels. And oh, make sure you like and subscribe to our Instagram channel. Thanks so much. Talk to you next month.